Morning, everybody. Jay, welcome again to our podcast. Super excited.
Thanks
I
for
know,
having me back.
yeah, I know we've been traveling a lot, so we'll cover a little bit of that. In our last podcast, we ended up talking about the whole tech trend, where things are going, what's happening on AI, and we were going to take a deep dive into the channel stack that you track very closely. There are about a couple hundred companies in various aspects of partner ecosystem management. So I thought we'll start there today. Have you give us a little bit of overview of the entire landscape, and then maybe get into each of those islands and talk about who does what, how do they play from your perspective, and where they're going.
Yeah, absolutely.
So where should we start when we
All right.
look at your Chantech Island?
Yeah, I think we start at the very beginning. There's been channel technology around for pretty close to 3 decades in terms of how you manage partnerships. Where I got interested is some of the entrepreneurs that were coming in with more non-transactional technology, and it would augment the PRM, for example, and do some other pieces of the journey that might be in the 28 moments before the customer makes the decision, and not only augmenting the through channel marketing automation and more of the traditional PRM software, but doing particular things like, for example, attribution or some mapping or some other types of pre-marketing or co-marketing type of activities. And then starting to look post-transaction. In the last number of years, every company is going down the route of being subscription and consumption. So it's not just at the point of sale, every 30 days forever. How do we, not only monitor, measure, manage those 30 minutes, 30 days after the transaction that repeat? How do we upsell, cross sell? How do we enrich? It means the marketing, the selling never ends. And how do we recognize those partners? And so it started to get interesting as hundreds upon hundreds of entrepreneurs were starting to build software to complement Zinfi and other tools to kind of go and do these things. So with the tech stack, I wanted to make sure that I didn't just highlight every logo of everyone that's trying something. Understand the power when an analyst puts something together that, very large Fortune-sized companies are looking at this and building RFPs. So I kind of had a limit of, the 5 people in a garage, with just trying out their product without product fit or any kind of sales and marketing that was repeatable. I kept them off the list. And I wanted to make sure that, I was showing companies that had, some level of success that was out there, even if they're small, but, had something that was repeatable. So, while you have 233 companies across 11 islands, there are hundreds of more kind of on that parking lot, just going through those initial phases. And again, you can't pick the winners. Just go ask folks from private equity and venture capital. It's very hard to pick the winners, but it's easy to kind of watch as they grow and listen to their customers and what success they're having. And we're coming to this world where the 7-layer stack that we see today in sales or marketing or CX, we're now starting to see in the channel world as well.
So if we step back a bit, dial it back maybe a decade or two, there is a company here in Silicon Valley called Blue Roads, and even before that, that raised a boatload of money to build partner portal solutions, right? They kind of created and named the category partner relationship management well before, we entered at Zinfi. And their vision was, which kind of the industry has embraced, is that there has to be a digital handshake with your partner, no matter what kind, and there are various kinds. And I'd love to have you talk a little bit about that. But the portal was the gateway to the company. That just like the way Sales Portal could enable salespeople 24/7 without a product manager getting on a call training people, same exact way, a partner could transact with a business through a digital gateway, and that was the formation of the portal, right? So, and that evolved into partner relationship management. So looking back, I know you have been tracking at this segment with your own startups that you have done in this space. Talk a little bit about how it has evolved, let's say over the last decade or so. What was the central point? How these other things got attached to it, how these sub-markets grew, why did they grow, and then maybe a little bit where they would be going.
Yeah, I think we've made kind of 3 major pivots since the early days. There was a state that 75% of world trade goes indirectly. In the tech industry, the $5 trillion industry we're in, 73.2% of it goes indirectly. So this idea of having that handshake between a partner and a vendor, very important. A place where you can implement the onboarding, education, training. You can execute incentives, motivational, loyalty strategies, where you can kind of put out the deal registrations and the opportunity management. So around 100 things that became the modern PRM tool, started with that portal, which is that front door, that single front door that opens up a whole house full of rooms and opportunities, to work with a partner. The first major pivot was really the source of truth. This idea that all of the data collected on that partner and the deals around them, and how they went to market, and the relationship and the strategic planning and the QBRs, all the stuff would land, in that partner portal, that partner tool. Over time, sales organizations, marketing organizations started to move the source of truth about a partner into sales tools like CRM, where if the closer you could get the partner to the customer deal opportunity, the better it was, because salespeople, could see it. And now, a few weeks ago, we learned that 89% of salespeople in the world now are using partners every day. So that was a really important thing, to introduce that data, partner data, back into the tools that other professionals use. The second major pivot, kind of came where we looked at non-transacting partners. McKinsey went and started talking to the boards of the Fortune 500 to say, do you know that there's 7 partners that surround your customer? You may think that there's a single throat to choke. You may think that there's a trusted advisor. You may have built your entire program around the point of sale, and all the economics that you created around partnering get paid out at one moment. Well, that's not exactly true. There's all these moments before that, there's all these moments after that. And in the future, it might not even be an indirect sale. It could go on a marketplace, it could go direct. So there's all of these people competing to get into those trusted spots, the 7 spots around each customer. And if you don't better surround your customer at every moment, before, during, and after the transaction, it's not just about a portal anymore. This surround strategy is much larger, more complex, and how you monitor, measure, manage it, how you make that repeatable, reliable, scalable, starts to change. That was the second moment. And this is, I think, the environment that Zinfi grew so large in that you had a platform that was built around workflows, was built around this ability to automate so many different things, create these new rules, create these new ecosystems around your company, and not just focus on the point of sale. That was the second major phase. And right now we're living in the third phase, which is, where do we create this data lake? Where do we create all of the data that's flowing through hundreds upon hundreds of tools? And then in marketing, there's 14,000 tools. In sales, there's 5,000 tools. I mean, there's tens of thousands of tools that need to talk to each other. And the data needs to fall to a point where it can train and tune large language models over the next 10 years. So this is just a point in time, very early on. We'd be in the first inning of this conversation. And this, what was a portal, which became a full management system, which became, much larger, is now the place that all of this data of point solutions needs to fall to better tune and train these models of how we're going to be living in AI in the future.
So before we get into the future, let's kind of stay for the moment this country of islands that we have, right? The Bahamas, let's say, Jay McBain's Bahamas. So can you walk us through in each of these islands what they do, like when we look at channel data management or we look at PRM, what they do, what pain points they solve, what are the opportunities for evolution in that part of the island? And then we'll maybe talk about this data lake that you're talking about infusing together LLM.
Yeah, when I originally published this is about the 7th or 8th year in a row. We're just working on the 2024 version right now. I had it more in layers, where PRM was that front door. It was that layer, the bottom of the 7 layers. And then what you did is you added, more point solutions on top. Because in, today's PRM world, it does, hundreds of things across the board. And a lot of companies, if they wanted to do something to the next level. They wanted to take incentives, for example, and go and roll them out in 193 countries in every language and every currency. The PRM didn't have the full incentive stack. So you may do a 1-2, investment. Then you may go add through channel marketing. So the 5 islands across the bottom, where more of the traditional layers, and depending on the size of your company, PRM may do everything for you, or in more complex and more kind of fortune sized companies, you may actually build a stack of point solutions that actually work with the PRM to do all that. The five islands of innovation across the top are these, they all start with ecosystem. And the word ecosystem is just synonymous here with non transacting partners. How do I start measuring, monitoring these non transacting moments, whether they show up before, during, after the transaction? They show up in technology alliances, strategic alliances, business alliances, the things that maybe I couldn't measure before, but where that data is important. That's why it's islands of innovation, and that's why when you see tech stacks in front of other buyers and complete ones, like I mentioned the Martech one with 14,106 logos, they end up showing up kind of like islands. I need to build a 7-layer stack. Today I have 11 islands of innovation kind of competing for each of those layers, and some are more important than others depending on the type of program you're running, type of partners you have, the industry you're in, the different layers of it. But drawing it like the Bahamas here, it's this idea of walking a customer through what are the differences, in a point solution that does something, very narrow, but does it very, vertically well, versus something more horizontal that kind of does, everything, but may not do specific things well. And what's most important to that company, what's most important to their partners, their program, and then being able to invest in the underlying technology to make it work.
Looking at the current state in a little different way is that when I look at last 5 to 7 years, right, close to about 500 to $600 million have gone into this space through roll-ups, through investment, trying to scale, specific point solutions.
Yep.
And we really haven't seen breakouts of those investments into 100 plus million dollars, right? They have grown, some grown. You have always, every time we had share our technology platform with you, you were like, Sugata, stop showing technology, go raise money. You got to scale this thing, right? And I was like, I'm not sure, right? So what I'd love to kind of hear from your perspective, outside the big logos like the Salesforce and the SAPs and etc., that they have their own motions in place, and they're scaling in a very different order of magnitude. But companies of our size, a little bit larger, why haven't they been able to scale by raising money? Where do you think the challenges are?
Yeah, we've been limited, number one, by the buyer. We're tracking, Crunchbase across these 233, as well as the hundreds of others that are trying, to get on the stack that are maybe in their first seed or angel rounds for their Series A. It's actually $3.2 billion have come into this market in the last couple of years. That's always the question. The first question I get from Wall Street is, I see Salesforce, I see Oracle. So if we ignore those for a second, where are the $100 million, $1 billion valued? Where are the unicorns? For a market that's been around this long, what is the limiting factor? And the idea is when you look at the buyer, there's 35,000 companies who buy into these companies. And that's what makes up the $5.3 billion in spend last year. It's growing by double digits. I mean, it's a solid market. But where are the breakouts, and why aren't we seeing more consolidation? Why aren't we seeing more roll-ups into these larger players? Why haven't we seen any IPOs? It's a limited buyer. If you look at the TAM, the 5.3 billion is actually what was spent last year. You would say how many people are still on spreadsheets? How many people are not investing to the level they want to? Surveys would say that this is barely half of what companies should be spending. So the TAM would be north of 10 billion, but that's still less than 10% of the MarTech TAM. It's a fraction of the sales tech TAM or the CX TAM or the product TAM or HR the TAM or the CFO's TAM. When you look at the $278 billion in SaaS being sold, this makes up a pretty small number. This is a buyer that has a limited budget. They're spending a lot in front and back end margins and gross to nets. It's a highly manual, heavy people business in channel account managers. And this buyer hasn't, much like the decade of sales or the decade of marketing predating us, haven't gone to be very highly technical people investing in automation. So What makes this change? Are we all of a sudden going to have a younger, more nimble, more AI automation focused buyer, or are these other buyers inside the bigger $278 billion market recognize the power of partnerships? The 89% of deals happening today where sales are working with partners, at what point does the CRO come and look at Zinfi? At what point does a CMO who's losing their cookie, losing the third party data that fuels about half their tech stack, and understanding the first 28 moments of a considered purchase are going to be partner led? These are your partners, or should be your partners, that are owning each of these moments. And you should be exchanging that data in a second party data way. When our CMO is going to step in with their 110 or $120 billion budgets into this channel stack? When are CX buyers that realize that it's partners, the 7 partners that surround your customer, which are going to drive the renewals and the retention and the enrichment? And your success relies on partners. When are they going to step in and add to ServiceNow or Zendesk or whatever's in their stack and start adding partner technology? This is when we step into the bigger TAM of hundreds of billions of dollars, go get our fair share of it. And that's when you start to see, some IPOs. That's when you start to see some unicorns take shape.
So let me kind of double click some part of what you just said, right? And as you know, I'm friends with, even though we compete fiercely in the marketplace, a lot of the founders and CEOs in this space. We text notes with each other. I ping you, we chat, and we're always trying to figure out, because we need each other for the market to grow, because none of us have enough marketing dollars to educate the market. So it's important that collectively we have our specialization and we drive, but it's also important for us to understand how can we help the customer in the long run, right? So if I kind of simplify, and you and I talk in terms of analogies a lot, right? So last time we talked about Big Mac and French fries and Coke. So if we go back to maybe a flip-flop analogy, right? So when you think about the cavemen, when they used cowhide to create their sandals, then the Romans went to wooden and cloth or some other stuff, and now we have Crocs and Skechers and high-end shoes and whole bunch of specialization. So is it a combination of both, or do you think between chicken and egg, what comes first? Is it the buyer education that you're talking about, or is it the supplier solution what we provide? Where do you see the gap first?
Yeah, I mean, the major gap, and it goes back into history. And by the way, it dates back to fur trading and some of the eras that you just talked about. The point of sale, that market, that point of money or goods or barter changing hands. And that's what partnerships, third parties that you're involved with, have always been measured, have always been valued in terms of getting your product to market. We buy a car from a dealer, we buy a TV from a retailer, we buy peanut butter from a grocer. I mean, we're just used to having these conversations. Well, when partners surround every other moment, partnerships, your dealerships, your agents, your brokers, your resellers, your retailers, your franchisees become less of a department in your company, and they become a horizontal. And so in this new world, when you're calling on a sales buyer, who again, pretty much every deal today has partners in it, and 84% of them are saying that they're not making their numbers unless they have partners in the deals, the sales buyer has to have a deeper partner conversation than ever before. And this hasn't been growing, over the last 10, 20 years. It's happening literally right now. If you go talk to CROs, if VP of sales, you go to those conferences, you listen to those podcasts, they're all getting into the go to market, routes to market conversation, which in their language is the serviceable available and the serviceable obtainable markets. They're really getting smart in this space, which leads to technology. Same with marketing, same with CX. Our ability to grow is to grow out of our department. Our limitation for 10, 20, 30 years has been our department, and this misconception of the value of partnerships is somebody else collecting money on our behalf.
And so what I'm hearing from you is that the way to solve this, to have infusion of the buyer's journey through the partner's journey. So instead of looking at the partner, an affiliate, or a reseller, or an MSP, look at them and aggregate how, at what touch point the partner serves the end customer, and provide a continuity in that journey, right? And that's kind of what you're talking about. And this may be a great slide for you to maybe explain a little bit.
Yeah. So, I mean, it's this idea. Let's just focus in on before the sale. Lots of conversations on co-marketing and co-selling and reselling and things like that. Let's stare at the 28 moments that a customer goes through. And these are considered moments. So if you're buying a car, if you're buying a mattress, if you're buying $1 million worth of software, if you're engaging in cybersecurity, these are the average moments that a buyer goes through. Some of us go through 50 moments if we're really passionate. Some of us go through one. We drive directly to the dealership to buy the car. The average is 28. Now, in the past, a CMO would be staring at this going, I need to win on search. 81% of my customers start on Google. I need to win the SEO battle. Then they move down. I need to go win on Facebook, and I need to win now on TikTok. Oh, events, there's 270 of them in my industry. I got to go win. I got to guerrilla marketing. I got to give away the best kind of socks. So they understand these influences early, mid, and late into the journey. They understand in the tech world, for example, how important consulting is and design and architecture, configure, price, quote, as you go towards that buy in the upper right. Up until now, they have bought third-party cookies. When you or I are in the kitchen, having a conversation, Alexa overhears us, and then 5 minutes later, Facebook has an ad about what we were talking about. That's us being the products on the internet for the first, 30 years. That's what's changing. 45% of us are going into elections this year. We've told our governments that we've had enough. Google a few weeks ago lost, version 2 of the cookie in Europe. Last week they lost antitrust in the US. There's talk about breaking up, kind of what this first 28 moments looks like. But you can just know that them and everyone else buying our private data, personal data, as we, go between these steps, now becomes invisible. The only way a brand, so if Mercedes or Toyota or Chevy wants to know that we're in the car buying mode and we're bouncing across YouTube and then reading Motor Trend and Consumer Reports and then talking to our neighbors and friends, the only way they're going to know that is to go partner with those moments and have an ability to exchange data at that moment and be able to take action on it, which is more of the AI story. In real time, you want to capture the customer early and often. And if you can capture them early, salespeople will always say, the earlier I'm in a deal, my better chance of winning. Because I can actually walk the customer, whether physically or digitally, 75% of them want it digitally now, from every other step to the point of sale. I can have them in my journey, reading my ebooks, going to my events, going to, my influenced spaces. And so second party data changes over third party data. You don't get to second party data without 5 different pieces of technology on the channel tech stack. And then you need the data to flow. This is what I was talking about in terms of AI. Each of those point solutions drop data into somewhere. And I think that somewhere is the PRM that will cleanse, will properly label, will properly surface that data to then train and tune large language models and being able to execute at the edge in real time as this second party data starts to take hold. So that's the CMO conversation. That's the conversation now where it would have been very different even a couple of years ago when we were still relying on third party data, and third party data created $1 trillion companies in Facebook, at Google, and other places. And that value or that economics is moving now to who owns, and it's your partners that own the moments.
So, Jay, if we may go back to your island chart,
Yeah.
I kind of want to wrap this conversation based on what you just said, is that we have seen a success model in a little company called HubSpot, right? They have done an amazing job. They started with a point product in the marketing space. They sold it for $6,000, $7,000. They upped that ASP. They introduced TRM. Then they introduced customer success. Then they introduced Operations Hub. Now it looks like they're going to introduce some form of agent because Dharmesh is always talking about this agent AI and etc. Some form of way to mine this data lake because they have a pretty large ecosystem of apps now, right? Salesforce is Salesforce, similar model but different space. So what I'm hearing from you, the opportunity that exists today, our customers are going after buying these point apps because there is no horizontal solution that solves all of the problem, provided a single pane of glass, provide them sort of an insight, an interactive insight. I want to go in there and say, hey, why is the partner in Northeast in healthcare segment XYZ selling more than these others? Not go download an Excel at the beginning of the quarter, ship it to somewhere in the other part of the world at lower cost of labor, get some graphs and charts back. By the time I do a QBR, half of the quarter is over, right? So am I hearing from you is that the opportunity really exists? Like take a Salesforce or a HubSpot, like a vision that they have done, aggregation of apps through a unified lens, and bring that into this space. Is that what I kind of heard?
Yeah. So let me tell you back, we could have a Salesforce or HubSpot story. I'll use the HubSpot one because it kind of harkens back to what you said earlier. Let me tell you the HubSpot story a little bit differently. They were in a space and they were coming in to be right before the decade of marketing, right before these massive changes in the way we thought, marketing was done. As they kind of started their company, most of the CMOs that they would have met, their buyers, would kind of manage marketing with their gut. They used to joke at parties that 50% of my marketing dollars were wasted. I just don't know which 50%. That was really funny back in 2009 when they kind of really got their start. I will say, though, that they had bigger competitors. Eloqua got acquired by Oracle. Marketo got acquired by Adobe. Pardot got acquired by Salesforce. So they were lucky in the group of four platforms that they got to kind of run independently. And being the scrappy, kind of independent, they ran something called Inbound. So they spent the first 5 or 6 years educating the market. They created a movement where the average CMO in that mid-decade of the marketing went from 58 years old to 38. And the 38-year-olds called themselves things like growth hackers. And they were going to use digital technology like HubSpot to go crack what was traditionally that old school way of marketing. But here's the financial result of that. Through the first 5 or 6 years, when their bigger competitors getting acquired by Fortune 500 companies, the HubSpot value never changed. If you actually go back, they were worth about $1 billion for 7 straight years during the inbound days. They made a pivot. This is the pivot I'm talking about in channel right now, where they said, we got an integration first buyer coming in. The buyer buys in islands like this. They buy in layers. The average marketing deal today is 7 layers deep. Who is the smartest person out there that knows the most about this? So they hired the person that actually publishes the MarTech stack. Scott Brinker in 2017 was hired into HubSpot, and he walked in with 14,106 relationships with those folks that need to be better integrated with HubSpot and appeal to a buyer that had better integrations than any of their competitors. Then they stepped forward and said, well, there's all these partners that surround our customer. There's these 200,000 digital agencies who've been trusted since the Mad Men days in the 50s. They were trusted 20 years ago to build a website, 10 years ago to get you on the front page of SEO. These are the perfect people to step forward, up their game, and start doing the implementations, the integrations, and do some of this more serious work. And they were able to convince 78% of 200,000 companies around the world to step into HubSpot and all these integrations and this huge opportunity to take their businesses from 17% EBITDA into the 20s and 30s. So this was just a massive move. And I'll say within 18 months of that moment, both tech and services, they were a $45 billion company. They went from 1 to 45. It was an absolute hockey stick. This is the moment we're in channels. We're in mid-decade. It's this Scott Brinker moment now in channels that we need to integrate with each other, and all the relationships you have with your other CEOs, you need together to convince hundreds upon hundreds of entrepreneurs here, thousands upon thousands of entrepreneurs in other places of marketing and sales and CX stacks to all come in together to go surface this new opportunity. And we'll, move from what was the channel chief, that 58-year-old senior transactional channel chief in the front cover of the magazine, to now this channel hacker, or whatever we're going to call them, but this new age or this new era of technically enabled cross departmental executives that drive the future of partnerships.
Yeah, and we are a huge beneficiary of that, right? We have three or four different stack in our business process automation, and HubSpot is at the heart of it. We connect a whole bunch of applications. So I completely see the value and the vision in that. So Jay, I'm going to pivot to a completely different topic. This was a great way to wrap up the islands for now. You've been on the road. You were at the MSP event earlier this week. We were tagging back each other on LinkedIn. So I wanted to kind of take a few minutes. That's an incredibly exciting space, especially multiple of our customers that are selling through that segment. First of all, define that space because MSP is a big word today than it was. And I was actually looking for the press release I did when I was at Sonic Wall rolling out our first MSP program. I will find it and I'll send that to you and Michelle. But Charles Weaver and a few of us, we got a Marriott table together. We launched our first managed security service, product line, etc. It goes almost 20 years ago, but that industry has come a long way. So tell us a little bit, what does that industry look like? Who is in it? Maybe at a high level of the value chain, from a service provider to technology provider and anything in between. And where do you see it going?
Yeah, so I mean, the industry itself, and I happened to be there 25 years ago, in early days of working at Autotask and things like that. So I got to watch it as a participant, as well as somebody building programs for it. But these are the early days of being at a Holiday Inn in Wichita, Kansas, and fighting among small businesses, in a tech stack and stuff like that. But I'm showing here kind of the world's TAM in the technology industry, which this year is $4.94 trillion. This year, there'll be about $1 trillion in hardware, like those Sonic Wall firewalls. There'll be about $1 trillion in software. Now, most of the security companies are over half software, including a Sonic Wall, who made two software acquisitions in the last couple of months. But there's $3 trillion in services. One of the biggest growing services over the last couple of decades has been managed services. It was driven, obviously, by customers who wanted to outsource more of their IT and telco work because their access to hiring, top cybersecurity people today, top AI people, is limited, and they were losing the competition with the tech industry to go hire, some of the top talent. So finding the best and the brightest and signing up to a contract that was more predictable and more reliable. And on one side, the companies that were offering managed services were valued much higher. Every dollar they sold on a recurring basis was worth 5 or 10 times more than an old kind of break fix or thing that needed to be resold and rebought every so often. And so here we started with something really, really small. And it was really built around the really bad total cost of ownership in client server. Companies had finally thrown up their hands of these PCs and PC servers and networking and firewalls and everything else they had to piece together. And the ridiculous costs of running a help desk, of patching these things and keeping everything up. So over time, this industry just grew by triple digits, then it grew by double digits. It's still growing by double digits, but it's now $548 billion in size, meaning that 15 cents out of every dollar that a business or government spends on technology this year, hardware, software, services, 15 cents out of the dollar goes into a managed contract. This is an amazing and large, part of this industry, and it continues to outgrow most of the other segments.
So let's dial back a little bit. May not be 25, but maybe at least a decade. There's quite a bit of resistance in the IT organizations to outsource because they thought their jobs are going to get outsourced, right? So most managed service provider went after low value added thing like patch updates and reselling or maintaining older versions of the hardware that IT didn't want to deal with it. So when you look at the first phase of that journey, it was really scrap work that you converted into recurring revenue, right? Because they needed to be maintained and IT wanted to clear their backlog and work on more value-added business projects, right? Where is that now? Are they really doing scrap work or they're really doing value-added work in the managed services space?
Yeah, so the first time, this is one of the major things that I've got wrong in the past. I lived at IBM in the early days in the 90s where we all thought we were getting outsourced, for example, to India. When you actually claw back on that, business outsourcing stage or era of our industry, it was only about 30% of enterprises that did end up outsourcing significant people to lower cost jurisdictions. And while all of us, and it was selling magazines and TV headlines and everything else, it topped out at 30%. In the first 15 years or so of managed services, I saw the same thing happening. When you ask, are you outsourcing some or all of your IT? Are you comfortable? It's a psychology question. Are you comfortable as a company, as a culture, in terms of having third parties assist? It actually was at 30% as well. So I kind of put two and two together and said, I think human psychology is that it's going to top out in SMB and mid market and enterprise at about 30% of people that are comfortable in this motion. And then 10 years ago, all of a sudden comes cybersecurity. And the amount of talent that was out there, the battle for talent among the top cybersecurity firms versus the customer, it started to change the equation. And it was not a moment of if anymore. It was a question of when you were going to get breached or in a serious situation. So from just a compliance governance point of view, you didn't have the ability to protect yourself. So that 30% number, which happened twice, all of a sudden went to 82. And 82% of clients today outsource some or all of their IT. Every year, they're outsourcing more and more and more. So it's outpacing the security growth. It's outpacing any hardware and software company category. It's in this mode where the 82%, and that 82% is growing, as well as the amount of outsourcing that they're outgrowing. And it's become, for most partners, even non-MSPs. Like I'll say, I'm showing a slide now that there are 335,000 companies that have at least one managed contract. But I'm showing down the left-hand column that only 43,000 of them are 50% and above pure plays of their business goes recurring. Another 43,000 are between 30 and 50. So when you see my bigger bubble chart, I say there's 86,000 companies that I would say have achieved the MSP moniker. They use professional tools, they have a material part of their business going recurring, but that doesn't stop 250,000 other companies, and these are system integrators, these are digital agencies, these are everyone else, VARs, who have now added their first managed contract. That's why this is so large, because every customer, 82% of customers that they call on, are open to this recurring subscription-based or consumption-based model for services. And it drives more margins, it drives more stickiness, it drives better M&A valuations. I mean, it's good across the board, pretty much for everybody.
That's a brilliant example. I think it makes a lot of sense. And so if I build upon that, like in the healthcare space, you have generalist primary care. They are the kind of the gatekeeper. And what I'm hearing from you is that IT staff in house is a gatekeeper. They're generalist. And the moment there's specialized skills and rate of change in those specialized skills are so fast, it's almost impossible to find. And if we can find, one is not enough. You need multi-specialization access. And that's where the aggregation is happening, not at the user level, but at the partner provider level. And they're being called managed service provider. So if that is the case, this will even accelerate because AI, talent is scared. It's highly fractured because how you apply AI in manufacturing logistics is fundamentally different how you do in a marketing, in the model. So those specialization, do you see will fueling the managed services growth even further?
Well, yeah, this is the next generational change. I mean, security 10 years ago was the trigger to go from 30 to 82% of clients who outsource. I think 82 moves into the 90s. When you start to look at, how do we better take advantage of a Copilot? How do we better take advantage of a Einstein? How do we better take advantage of Anthropic or Gemini? How do we rethink our business, in the next generation? Like we're talking 10 years. And it's when you go out to hire somebody, because the consumer trend of AI, generative AI, is only 18 months old. And anyone with any relatable skills, today is making a lot of salary, and it's unaffordable in the pilot you're going to be doing to, bring somebody like this in-house, unless you're the biggest bank or the biggest airlines, biggest pharmaceutical companies. The degree of finding talent brings us back to cybersecurity again. Is just not going to happen. And so, are you going to outsource some or all of your AI conversations across every department, across every point of how you're rethinking your own business model and your own interaction with your customers? The answer is yes. Every company is going to have to find the right talent, build the right group of 7 people around them to take them into this next era.
That is amazing. So, why don't we wrap our conversation today? That seems like a great point to end. And we can make that a central point of our podcast next month when we talk again where AI will go from a partner perspective, channel perspective, what specialization they need to build, how they go to market, and how they can help end customers.
And
Jay,
by then,
thank you again.
yeah, by then you can just interview my co-pilot. I don't even have to be here.
Well, maybe not next month, but maybe thereafter. Thanks, Jay. Great talking to you.